Corsair Gaming. If you like playing games on your PC or console, then you've probably heard of them. They're not the biggest company, but they had their IPO in September last year, and they have been focusing on expansion since, just like me. So smash the like button to help out the channel, and keep watching to learn more about this amazing company. Corsair is a gaming company which has recently gained a lot of popularity because of Wall Street bets, and rightfully so in my opinion. They sell computer peripherals, gaming and studio accessories, custom-made PCs, components, services and so on, effectively offering customers a one-stop shop for anything related to computer hardware, gaming software and other computer services. The company believes that they can address a market size of up to $46 billion US, or about 24 times larger than their current market share of $1.9 billion, and they are expanding rapidly to make this happen. Over the last 12 months, Corsair acquired 3 new companies and launched 84 new products, while showing a 47% growth in revenue the latest quarter as compared to last year, 104% growth in gross profit, and a staggering 197% growth in adjusted EBITDA. How are they achieving this massive growth? Essentially, Corsair is trying to tap 2 of the fastest growing markets right now, gaming and eSports, plus digital content creation, which can be seen in their 2 main revenue streams, gaming component and systems, and gamer and creator peripherals, which were split relatively evenly last quarter in terms of sales. Corsair is using the growth in the esports market, which is estimated to grow 11% annually over the next 5 years, to kickstart their own growth. If you think about it, all of those millennials that grew up playing games are now able to afford specialized gaming gear, which is what Corsair is offering. We are also seeing a big number of Generation Z entering the labor market and being able to afford more expensive gaming gear. Gaming and esports have already become mainstream, with professional gamers earning serious cash and rivaling mainstream sports athletes in earnings. So we can tell that this is just the beginning of it. The digital content creation market is also growing at an annual rate of 13% across the board. YouTube, Twitch, and other video streaming and podcasting platforms are experiencing a massive surge in both creators and users. Corsair wants to use this to drive their sales using their creator peripheral products. Working from home has also led to a lot of people improving their home offices, and that trend is here to stay, which provides even more opportunities for Corsair to tap into yet another growing market. Finally, the company wants to convert existing customers into loyal customers that come back to buy again and again and again. To do that, they are driving engagement through social media, and they currently have a combined following of over 20 million across 4 different social media websites. Plus, they are represented by over 800 different influencers with a reach of over 1.3 billion people. They also offer customization and personalization in their products. They're focusing to be the best-in-class hardware and on selling solutions, services, and software that will cater to the needs of gamers and creators. Customer retention is always a winning strategy for companies when it comes to optimizing earnings, and it is good to see that Corsair is focusing on it, although I would also like them to start sharing some KPIs that track this. Before I go into my bullish thesis, I want to point out that the current stock price that I'm looking at is $36. Alright, so the company does not really have any strong rivals in my opinion, which is a strong bullish argument. There is Pegatron, but the company has suffered a lot over the last year due to labor violations. Another is Razer, but they haven't shown a lot of promise over the last year either. The closest rival is probably Logitech, but their business model and strategy are much different than Corsair's, and I think that Corsair has a much better positioning to tap into the growing markets. Still, both Logitech and Corsair have performed amazingly over the last 12 months. Although I see Corsair as having a much bigger potential for growth. Right now, it is only a 1/7 of the size of Logitech, with a 3.3 billion market cap versus Logitech's 21.7 billion market cap. Although Corsair's revenue is less than 3 times smaller than Logitech's, with a 1.9 billion US dollars versus 5.2 billion US dollars in revenue. Their price to sales ratio is 1.74 for Corsair and 4.14 for Logitech. So we can see that Corsair is actually undervalued in terms of sales. The main reason why Corsair is still lagging behind is their net income, which is still relatively low, but as I mentioned earlier in this video, their growth is supercharged and off the charts. Plus, this is completely understandable for a company that is in its early growth phase. Another bullish argument is the fact that a lot of hedge funds and institutions are betting against Corsair, which gives us the opportunity for a short squeeze. About 18% of Corsair's share float is shorted, which is extremely high and completely unjustified in my opinion. The company is performing extremely well and they are trading at a low price. Their forward PE is only 17.9, which is tiny for a growth company as opposed to Logitech's forward PE of 27. Plus, Corsair absolutely crushed their latest earnings. Crushed it, beating earnings per share by 25 cents or about 75%. They also beat their revenue estimate by 76 million or almost 17%. And to top it all off, they raised their guidance, but the price still dropped. Analysts keep revising their earnings estimates up, which is yet another bullish signal. Plus, Corsair has enough current assets to cover their current liabilities and has low debt, so financial health is not really a problem. They have one venture capital fund, Eagle Tree Capital, holds 62% of the company, and insiders hold another 4%, which gives us a massive, absolutely massive opportunity for price growth, especially when we look at their tiny market cap. I honestly think that Corsair can easily double in price and still be a relatively good purchase. The company is that good. Finbox's discounted cash flow model gives us a 43% upside with a target price of $51.5, and Simply Wall Street's discounted cash flow model gives us a fair value of $80.30, a 123% upside. So we can see that there are some decent bullish arguments behind Corsair. However you look at it, Corsair is a beast of a company and an absolute bargain. Honestly, out of all the companies that I've been researching recently, this one looks the most promising. Corsair is one of my biggest holdings right now and I will just keep adding to it. Another company that I am really bullish on is Baidu, and you can check their analysis here. If you enjoyed this video, make sure you support the channel by liking, sharing and subscribing. Thanks for watching and I'll see you in the next video.